Next up, we have FYI Resources. And surprise, surprise, ladies and gentlemen, the ASX code is FYI, so you can't forget it. Now, FYI is developing a high-purity alumina project and operation in Western Australia. Here to tell the story is the Managing Director, Rolly Hill. Rolly, it's all over to you now.
Thank you very much, Kerry, and hello, everybody. Yes, and also thanks to NWR for hosting this presentation. I'm glad to be here for it. I know that time is fairly short, so I'll just jump straight to it, if that's all right, Kerry. I've got the usual disclaimers that I encourage everybody to read in their own time, but we'll jump straight to the first slide. And the reason why I have these slides here is really what I wanted to do is just to highlight the strategy that FYI has and the core principles that we're trying to follow, and that'll become evident in the rollout of our strategy, the platform of what we're trying to do. And we really have just six principles that we're running with. And first and foremost is the strength of the strategy, the background to the strategy and the reasons why we're doing things. That leads into the quality of the work that we've undertaken to date. It's sort of been a 3-year development program, and I hope that the quality becomes evident and will actually set us up for the platform for the future. Within that strategy and the quality, we have a couple of natural advantages I think that the company has in terms of what we're trying to do, and we'll talk a little bit more about that. The timing of the strategy, I think, couldn't be better in terms of the growth outlook and the forecasts that are into the market. There's quite a few independent research groups that follow HPA for good reason too, I must admit, and that is that the advantages going forward in the future. Equally important with the culmination of our strategies, the economics that we produced. We put out a DFS earlier this year that showed some pretty sterling sort of numbers, and that again sets the platform for our project and our financing and going forward in terms of attracting everything else. And then I think finally, is really the validation of all the work that we've done. And everything that we've done is made sure that we've double checked everything and made sure that we've done everything to an nth degree. Obviously, we're dealing with a very specific product here. It's very difficult to make, it's very difficult to handle, but that also represents why we're getting such a price premium for it, or forecast. So everything we do is validated and backed up and confirmed. So the culmination of all that is really our commitment to excellence in terms of the HPA and the strategy that we're trying to do. I won't go through this side in particular, but really just wanted to point out a couple of key points, being the fact that we have a great strategy, a great team behind us in terms of our project managers. It's very experienced at what we're doing, and I think that shows spades in terms of how quickly we've come in such a short time, and the fantastic work that we're achieving at the date, and obviously setting us up for some more good news in the future. So we're very successful. We think it's a fantastic ultra high purity, ultra high quality product, and that's getting recognised in the market as a result. And that'll come through. And as a result of the work that we're doing, I think we've sort of also attracted some pretty interesting tier 1 support through the recent signing of Alcoa joint venture memorandum of understanding, MOU. I'll touch on that a little bit further in the presentation, but also attracted 80 million of equity commitment funding. That's with some pretty interesting groups of people and some I think we'll see some interesting people pop up in the register as a result of that. And also, I think the key thing really is the fact that we're starting to get high attraction from market participants, offtake groups that are very interested engaging with us on our product. So probably appropriate also just to say what we've achieved in the last 12 months. We've had some pretty fantastic key achievements, both in terms of the project enhancement and the de-risking of our strategy and our project. I won't go through all of those bullet points there. You can read that in your own time. Certainly the presentation will be up on our website and represented by NWR as so at your own time. But again, just the key things. The Alcoa joint venture is key. We'll talk more on that, as I mentioned. The fact that we have a great product, a great strategy, great metallurgical results, and the validation of that. So our focus is unerring on terms of our development, and we see that we're getting to the pointy end of that now. So we have a lot more key achievements to come over the next 6 months, 12 months. But for now, I think we're pretty impressive track record. That track record resulted in our DFS. I won't go on this because a lot of people really know the story, but other than to say that those project economics, the summary points there really do lead to the fact that we have a world-class project and in the lower order OPEX and CAPEX, so very attractive in terms of investment principles to shareholders and to financier groups. Going forward, this will be the platform of our development, and I think we'll get pretty close to being re-rated on that merit. Some of the key things since our last NWR conference, one of the key things is the Alcoa MILESTONE MOU. We're currently developing, working our way through this. We have probably about 2 months, 3 months work through on that. Really, the point here is that we're working collaboratively towards a common goal, and that is collaboration in FYI's HPA process. We attracted Alcoa's interest on a number of reasons, and from our point of view, our perspective, we certainly see Alcoa as being a great partner in this strategy. They're bringing a lot to the table, as are we, and we see it a collaborative effort to really end up with a tier 1 project and HP offering. And we see ourselves positioning quite strongly in the market, and in collection too, I can see that has been a huge advantage. So again, I won't go through every point. You can read that in your own time, but from our point of view, we do see this as being a tier 1 de-risking factor and contribution to our project. Our timeline for the joint venture is outlined there. We've actually commenced already. We signed in September this year. We've commenced work. It's going to culminate in a pilot plant run that we're currently refitting our pilot plant to accommodate. That's been funded by Alcoa, in fact, so pretty happy to start off on the right foot there. It's going to lead into production mid-December, and hopefully the finalising of the pilot plants and a few discussions will end up having sort of elevated discussions around the terms of the joint venture around about December this year, January next year, and hopefully lead to formalising that fairly soon after. So the next thing that we've been doing is through customer offtake response. We've had inquiries about doing some particular product work. During our last pilot plant run and the successful outcome of that, we've adjunct our work to that to do some elevated work around meeting the characteristics and specifications of a couple of particular targeted offtake groups. That work's still ongoing, but we put an announcement out last week or around about that, just to give an update on that market. It's going exceptionally well, to the point I think that the reception was that the results were above their benchmark, so very receptive in terms of developing that further, and we hope to have some more news around that shortly. So in terms of our HPA assessment and the qualification of the HPA, given that it is a new product, and certainly the way that we're manufacturing or refining it, we see there's some natural advantages to that, certainly over the current supply from bauxite. And bauxite has some particular deleterious materials in there that in the modern age and use for application for this is not so good. Kaolin has an advantage in terms of its chemistry over that bauxite derived material, but it is new, so a qualification period is required. we have a particular pathway that we're approaching to do that, and a fairly intensive one. Some of the key dates and some of the key achievements are outlined in this presentation, but obviously it's still ongoing, and we'll be doing more work on that directly with the off-taker groups. So I guess why are we doing all that? Really, it's the market and the market growth. And these particular numbers that are outlined in this graph on this particular graphic here, not necessarily our numbers, they're all independently derived, although we did discount some of the more aggressive numbers out there. These numbers were used in our DFS, so we see that as being quite conservative. But anyone can sort of see that the outlook for HPA is particularly good. An average growth rate of around about 17% per annum year on year. So there's certainly some incentive for us to get this strategy up and running as soon as possible and address that growth that we feel realistically won't be met by the current traditional supply, and also the qualification of the specification of the bauxite material probably won't be sufficient either. So we see that there's a lot of room for us to move into this market at a great time. So, and excuse me, and how are we going about that? Well, we do have a strong focus on the market engagement. We have a set strategy to do that, outlined in this graphic here. We structured approach, a very staged approach to that, very deliberate in terms of our approach, targeting a number of key people, key groups, off-taker companies, across a range of products and jurisdictions. I have to say that at this stage, the reception is very good. What we're trying to do internally, as outlined on this graph and graphic, is we're segmenting our approach to the market. The market is essentially split into two. There's the traditional use that has still a growth to it, but is an established market, and that's essentially the LED markets and a couple of the consumer goods on the right-hand side of the graph there. We are targeting that. That represents around about 60% of our market designation. But the upside really is in the batteries and the e-mobilities, and in terms of the separator markets, the lithium-ion markets, and some of the more interesting things that are coming out of battery development that's happening around the world, I guess, but we're also included in an R&D sense. So we see that the market not only growing as a result of just pure demand, but also the breadth of the application that seems to be growing as well. So what we're trying to chase is essentially the purity. There's different purity markets of this material. There's different characteristics that's represented. For example, ours is different to the bauxite. We also want to have a bit of jurisdiction diversity, application diversity, and all this adds up to sort of trying to achieve an optimum pricing for our overall 8,000 tonnes per annum production that we're hoping to achieve. So some of the things that we're trying to do, some of the advantages that I think that we have, some of the enhancements that are natural to us being wholly integrated within WA, and some of the support factors that we've been following and that have been attracted to us sort of culminate in the fact that we are WA based. Our Kwinana is a very key thing to our development and our global recognition. We see that the Kwinana industrial area, or the KIA, is a tremendous platform and leverage for us. Our site, our selected site that we have here, as I'm circling, is a prime spot. We have government support for this through lead agency, which was granted earlier. We also are a key member or founding member of the Future Batteries Index, CRC, which is a very interesting thing. A couple of your previous announcements and presentations might have gone into this, so I won't go into that in great detail as well. But we do see that this tremendous amount of leverage that will be generated from these relationships and our positioning within the market. So we see the KIA as being an incredible asset to us and to the state of Western Australia, and also to Australia. What that will mean globally is incredible, and we're very proud to be a part of that, and we'll hope to leverage off that as well. Another very key thing that is emerging, this is not only just from the customer perspective, I suppose investors and a number of other groups, stakeholders are getting very interested and very serious about sustainability and the SGA factors that we represent. The HPA that we're producing from kaolin and our production refining source is essentially of the highest of standards of the ESG. And we see that we're getting a lot of one-to-one market response from customers that are keen to have this element highlighted. The lucky thing is that we do have some tremendous environmental advantages through our lower carbon footprint, and we'll be accredited at some stage regarding this, but we also see that this is a fantastic market advantage for us to focus on. Obviously, it's not our core business. We're on with making a high quality, high purity product, but the fact that we can do it on a higher ESG standard adds benefit to what we're trying to do. And it also improves the provenance and guarantee of our product, that we can guarantee from source to source or production to consumption, that we can guarantee that production line. So some very key things there that are making it very attractive to the investor and the offtake parties. So in terms of our timeline, we had a very busy last 12 months. We're looking forward to a very busy further 3, 6 and 12 months. The highlight of that will be the Alcoa pilot plant trials that we'll be doing next month, and the associated work around that. We'll have ongoing marketing activities, ongoing financing activities, and then our elevated engineering and final investment decisions to proceed with production and fabrication of the plant at our ideal site there at Kwinana industrial area. So we think that we're going to be a little bit busy, but we're looking forward to the challenge and certainly to develop this project further. Just a quick summary of our corporate overview. We're still very tight capital structure. Obviously, we've attracted a little bit of market attention in the last little while, but I think that seems to be generic to the EV industry and associated commodities, but also the fact that all our hard work over the last 12 months is finally being recognised in the market. And we still see that there's a lot more value to come as some of our KPIs come in, and the leverage off some of the hard work that we've done in the last little while is recognised in the market. So finally, in wrapping things up, again, I won't go through all that point, but I do think that we're in a fantastic investment case, a great opportunity into an emerging growth sector, and the fact that we've doubled up on all of our work and it's validated, I think it's certainly a de-risked strategy. So I'm very happy to leave it here at this point, Kerry, and take on any questions that some of the investors might have.
Thank you, Rolly. That was an excellent presentation. I've got to say, you've answered about 3 of the questions that have come in because it's such a good presentation. So well done on that one. But I do have some others, and we don't have a lot of time. So what other options do you have for developing your HPA project if the deal with Alcoa doesn't eventuate?
Yeah, no, that's a good, very good question. Obviously, Alcoa is a big company, and we might have different timelines or different things. On a technical platform, I don't think that risk is high. It's probably going to be a corporate issue, if anything. nonetheless, we are working very hard to making it a success. But in the event that it doesn't, we are still continuing on with our, well, it's essentially our plan A. That proceeds unabated. We're continuing on with that in parallel with the Alcoa joint venture. I can kind of see it's going to be a case of 1 + 1 = 3 if Alcoa, or a multiple of that, if Alcoa do come on board. We see that as nothing but upside, but failing that, we will still continue without them, and you know, I can still see that future will still be unchanged for us.
Yeah, and it was really interesting to look at the market and just how strong it's going to be going forward. You reported last week testing in Europe by a market participant had provided some positive feedback. What's the next steps in that process?
Well, that's right. That's that was very good feedback. You know, above benchmark results for both purity and quality, and some of the other characteristics for there. We're still doing work with them. That'll continue on. Unfortunately, we don't have a lot of control about that because they'll end up doing a lot of work on their own. But we see that we will provide further material for them. We'll do further work. They'll go on to their counterparties and just see how the reaction from those groups are. We're looking at providing sort of between quarter to about a half of the production through this particular group. So it's, you know, it's meaningful to us. So we'll just take our time and develop this appropriately. But at this stage, you know, expectations are very good. The fact that our material meets their specifications, you know, we see that that's a huge advantage for us. So, but we'll take it nice and easy and steady. That seems to be our development approach. But at this stage we're quite hopeful that it'll bear the fruit that we're providing the energy to.
Another question is touching on your potash area. You've got a clear advantage in the HPA space. Are there things you can touch on the sort of the potash area as well?
Yeah, potash is an interesting product. We really haven't touched on that too much over the last couple of years, primarily because of the asset and the politics around that. So it's something that we put on the back burner. There'll be a time and a place that we'll get to that, but right now our focus is sort of really 100% on the HPA. The potash is not taking up any management time and no costs, but HPA is really our focus for the time being.
Well, speaking of that, are you looking to sell a portion of the project to an offtake customer?
Yeah, so I did just touch on the financing a little bit. Obviously, we've got a couple of equity commitments in place. That's attracting further interest and investment proposals. We're investigating a couple of very interesting options as well, of which one of them would include a sell down of the project for equity. In fact, I think this is really the broad structuring for the Alcoa joint venture, where they'll take a as yet undecided equity amount in the project. You know, they'll be responsible for the costs and what have you, but it'll also be a joint venture marketing proposal. It doesn't make much sense that we actually split the product, the HPA product, and we market separately. We'll just end up cannibalizing each other. So it's going to be a joint marketing exercise. But essentially, that's what we look at doing, is for capital that will be directed towards the development of $190 million US is our CapEx suggestion. So yes, we'd look at selling down, raising the cash for the capital, and being a partner at project level.
Rolly Hill, congratulations on all the milestones that you've been hitting since I last saw you, I think about 3 years ago in Sydney. Congratulations, great presentation, and I'm sure we'll see you again soon. Thanks for joining us today.
Fantastic, thank you, and thanks to everybody attending. Cheers.